and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the course of the show. So guys, please keep commenting on our live feed and we'll have it addressed by our guest on the show. Before bringing him on the board, let's see what the global handover looks like. European stocks closed higher on Friday as investors digested strong US payrolls report. Stock 600 was up. It closed the session almost 0.5% higher with most sectors in the green. DAX outperformed with gains of over 1%. Stateside, Nasdaq rose during the choppy session as investors reacted to a stronger than expected jobs report that is likely to keep the Fed Reserve on track for its aggressive rate hikes. Dow and S&P shut shop marginally lower. Meanwhile, stocks in Asia see volatile trade this morning. Japanese stocks rise as the country's ruling coalition is set to increase its majority in the upper house of the parliament. SGX Nifty indicates a weak start for the Indian market. On the show today, we take stock of how Q1 earnings are likely to be for India Inc., market outlook for the fresh quarter, along with discussing the technicals of TCS, DRL, Zydus Life Sciences, DMart and Crompton Greaves Consumer. Let's touch base with Gaurang Shah of Geojit Financial Services. Good morning, Gaurang. Great to have you on the show today.
Thank you, Karan. Good morning.
Let's talk about what's happening in the market. The quarter gone by, or in fact, the entire first half of the year has been extremely turbulent, extremely volatile. We saw both equity and debt markets lose quite a bit. And on the flip side, you had the US dollar, commodities soaring and how. Talk to us about how things are likely to pan out in the fresh quarter and perhaps if you could give us a view on what to expect in the second half.
Thank you, Karanya, and morning to all of you also. The sense at Geojit is that maybe the large part of the pain that was there, we have already witnessed that. I'm talking about the Indian equity markets. Maybe in the US and elsewhere in the Europe, there may be still signs of pain depending upon what the situation of economic recovery is, where does the interest rates rise, and more importantly, where does the inflation head. So I think there could be a little bit of more pain as far as the US and the European markets are concerned. But I think by and large, the low levels that we saw very recently, somewhere close to 51,500 on the Sensex and somewhere just below 15,200 on the Nifty. This could be the near-term bottom. I am saying this with a word of caution that expecting that there are no adverse news flows as far as the global and the local markets are concerned. And more importantly, for our markets, I think it's very important to keep your eye on the crude oil prices as well. Now, they have been on the lower side. Rupee is something that we need to worry about because it is inching closer to that 80 rupees to a dollar mark. So that's where I think there could be a little bit of concern. But overall, the sense is that there should be some amount of recovery in the second half. Maybe one should expect a little bit of modest return, nothing out of the blues in terms of the higher levels that we'll see. But on the earnings front, I think since the pain is behind us, currently my sense is that we could see a gradual improvement on the numbers given the back to normalcy that we are witnessing. And on that front, I think sector-wise, if you ask me, Karanya, then I think services sector is something that interest rates are lost, wherein you have IT, you have banking, you have NBFCs, telecom service providers, life insurance companies. I think these are some of the safe bets that you can take. Of course, we did see the TCS numbers over the weekend. There was a little bit of concern, but we take it with a positive approach in terms of IT sector. And on the contrarian side, if someone's got a little bit of risk appetite, then I think auto, cement, metal and FMCG. These would be the four sectors. And my advice to the viewers would be that look at large cap first and then select mid caps currently.
Okay, let's talk a bit more in detail about the IT space. TCS numbers, I think a tad disappointing. It's the bellwether of all the IT companies of the entire sector. So talk to us about how things are likely to play out from here on for the rest of the companies in terms of earnings, whether it's heavyweights like Wipro, Infy, etc., or some of these mid-cap space, whether it's Mindtree, whether it's in L&T Info, so on and so forth.
So you're absolutely right, Karanya. TCS sets the mood for the earnings, not only for the IT sector, but broadly across the board, but more importantly for the IT sector. And the numbers were a little bit below expectation. Uh, in fact, to be very honest, I think last financial fourth quarter was nothing on the great side. They were also a mixed bag. But our sense at Geojit is that if the IT sector and the services and the platforms that they provide is going to be very integral for any small, large, or medium-sized enterprise. And more importantly, Karanya, in our life, individual life as well, we use so much of IT-related, platforms and services that there would be improvement. I'm not saying that there won't be any improvement. There were concerns about inflationary pressures and corporates cutting down on their IT spend. But on one side, if you have to cut down on IT spend and expose yourself to all the vulnerabilities as far as the cyber attacks are concerned, then I think that's not going to be wise enough. And in today's kind of the new normal that we live in, I think it is very prudent to keep your IT environment safe from any kind of external attacks. So my sense is that you are going to use IT. You may spend a little bit less, but it's not like you're not going to spend at all. So I think it's a contrarian bet on the fundamental side, if you ask me, at the valuation where the IT index or the IT stocks trade at post the correction. My sense is that these are some interesting levels to at least start nibbling in. Don't go 100% all out. And in terms of order of preference, if you ask me, from the large cap big boys, it would be TCS, HCL Tech and Tech Mahindra, then of course Infosys. In the mid cap universe, now that you have the merger coming through in some time, I think Mindtree and L&T Infotech would be something that would interest us to a great extent. Along with that, L&T Technologies, Coforge, two names from not so spoken about, Tata Elxsi and KPIT Tech Karanya. I think this should also do reasonably well.
Okay, all right. So what is your sense? How are things likely to pan out for, the investors of TCS? In fact, even DMart, another earnings candidate, and the earnings season is starting, and these are the two names typically that deliver their earnings earlier than the others. DMart is another name that could hog the limelight today. So what is your view? Are you tracking DMart?
We do, in fact, and there were, during the lockdown, because of restrictions that were put into place, we did see a lot of stocks correct. And honestly, I think on one of your sister channels, if I'm not mistaken, just about 2 or 3 weeks back, we had given a fundamental buy call on DMart, that is Avenue Supermart. And Karana, let me tell you, I think with the kind of numbers that they have shown and the kind of footfalls that they see almost every day. And along with that, you have a very strong business strategy in terms of increasing your presence, not only in the metro cities, but along with that, you want to increase your presence and reach in terms of tier 2, tier 3 cities. So my sense is that this is one stock that could possibly see levels of 4,800 and 5,000 over a longer period of time. And with the numbers that they have given, and like I mentioned, the new normal that we live in, my sense is that stocks like DMart or Avenue Supermart would do fantastic over a longer period of time. So if you're looking at some wealth creating ideas in your portfolio, then this should be the one.
Okay, all right. But are you comfortable with the current valuations? The stock did hit that low in the month of May. I think around 3,200 is where it reached. It has rebounded a fair bit from there. So are you comfortable with where it is right now, or would you advise investors to buy when it cools off a tad from these levels?
So, Karanya, one thing that I don't advise people, or we don't advise people, is to wait out for that right price. And unfortunately, in waiting out for that right price, you end up losing out the opportunity in investing a good stock. So hence, I said that, start accumulating the stock at current levels. And you get dips, I think you should go and add to it. If I would be an interested investor in Avenue Supermart, then at current levels of whatever investable capital that I have, I would possibly take a dip of about 25 to 30% of my total capital that I want to invest, and go ahead and buy it at current levels, and gradually in parts of maybe 20-25% on dips, go on adding it. One should not really go and rush into the market when it comes to investment. But yeah, when it comes to booking profit, I think you should definitely take a leap forward and do that. So investments should be done gradually. Profit booking, as and when you get the returns that you have in mind, I think you should book your profits as well.
Okay, all right. I want to also flag off two names from the pharma space. One is Dr. Reddy's and the other is Zydus Life Sciences. And both of these companies are also, going to be hogging the limelight on back of some new launches. Dr. Reddy's has launched a tablet called Festeroderine for meat tablets, and this is essentially for bladder-related problems. Then there is Zydus Life, which has launched a diabetes-treating drug, which essentially targets type 2 diabetes. It has a 62% market share in global market. So some updates, some new launches coming in from the pharma space, two big names, DRL and Zydus Life. What is your assessment of the entire pharma space, right now, especially given the backdrop of a weakening rupee? Is this a sector that perhaps investors can look at?
So I think when it comes to rupee dollar equation, Karanya, two sectors come in the spotlight, that is IT and pharma, given the exposure that they have in terms of their turnover with respect to dollar revenues. But let me say this with investors should approach pharma sector with a cautious approach, because gone are the days when you will get those kind of flying returns that you did when the pandemic hit the entire world. I'm talking about March, April, post-March, April, till I think beginning of this year, or ending 2021, you did see a phenomenal return coming through. And I think once the vaccine was discovered and doses were given out, numbers of reported people getting COVID came down, and restrictions, started into unlocking and new normal set in. Effectively, what I'm trying to say is that you may get a little bit of conservative return from the entire pharma space. And if I have to pick top 3 or 4 names that we cover at least a dozen names in the pharma universe, Karanya. But if I have to pick top 3 or 4 names, then that would be Cipla, Divi's Laboratories, Dr. Reddy's, and Sun Pharma. These 4 would do relatively better compared to the other peers in the same sector.
Okay. So, Cipla, Divi's, Sun Pharma and Dr. Reddy seem to be your picks among the pharma space. Interesting to know, especially, we're getting a lot of queries as well on DRL. So, I hope our viewers are also satisfied with the answer you've given. But what is your sense on the consumption space, especially the discretionary basket? You've talked briefly about FMCG earlier on in the show, but I want to know how are the discretionary plays likely to play out, whether it's a jewelry company, consumer electronics, white goods, etc. Any view you have here?
So in the entire jewelry space, I think we did see Titan. Last week, I think it was a flyer of a stock. And this is one stock in the entire gems and jewelry, wristwatches, eye care, accessories, etc. that we extremely are positive about. And I think current levels are decent enough, somewhere close to about 2150 or 2200. I think it's a great investment idea from a long-term point of view. The demand, Karanya, for jewelry as well as high-end wristwatches is significantly picking up steam. And our sense at Geojit is that for the coming earnings for the next couple of years or quarters, I think Titan would do extremely well on 3 counts, that is gems and jewelry, wristwatches, and eye care. Accessories and etc. I think would take a little bit of more time to give significant contribution. But I think Titan is a great stock to look at. Amongst the consumer durables or white good appliances, if you will, our sense is that with the good monsoon for the 4th or the 5th consecutive year, Karanya, the demand which was on the lower end from semi-urban and rural India will pick up its pace. And with direct cash transfer benefit, I think a spendable income or for a common person to spend more, the leverage will be at a higher level. So demand for refrigerators, air conditioners, coolers, LCDs, TVs, etc., microwaves would significantly go up. And we've seen a significant amount of demand coming in from the metros as well. And this was visible in terms of the commentary that we heard from some of the names like Blue Star, Voltas, Whirlpool, Symphony, to name a few names that we cover. So my sense is that along with the, and remember one thing, India has been a consumption-driven economy. Now, whether you look at FMCG, that is daily consumable, or you look at discretionary spends or consumer durable items, like I mentioned, the companies that we cover. My expectation is that in coming quarters, these would also do reasonably well.
Okay. Gaurang, request you to stay on with us. I want to touch base with Shrikant Chouhan to talk technicals of the market. He's joining us from Kotak Securities. Good morning, Shrikant. What is the trade setup indicating to you? Because the last time I checked SGX Nifty, it was a tad weak. Yeah, it continues to be down by more than 100 points, just above that 16,100 level right now. But what do you think lies ahead for the day?
Yeah, good morning, Karunya. Good morning, everyone. I think, the market is already reached to its important crucial resistance level of 16,200, where the market can spend some time. We saw a consistent activity in the previous week. The market was around some 15,400 levels. From there, all the way it reached to the levels of 16,200. So now some correction is not ruled out because number of stocks have reached to their important levels, and TCS has announced its quarterly number, which are below expectations. So we may see some correction maybe in the first half of the week, close to 15,900, where the market is having excellent support. From there, again, we are expecting market to rebound. We are expecting market to consolidate between the broader range of 16,400 and 15,700 on the downside for the next few days. But the strategy should be to look for adding long position if there is any correction close to 15,900 levels with a stop loss at 15,700. It should not close below the levels of 15,700 on a day-to-day basis.
I was just talking to Gaurang about consumer discretionary and durable space, and I want to also, bring to the forefront Crompton Greaves Consumer Electricals. There's been a trade here. SBI Mutual Fund has offloaded close to 3 lakh shares of the company via open market transactions on the 7th of July. With this, their stake stands reduced to 3.65% versus 3.7% earlier. So about 0.05% stake is what they have offloaded in the company. Can you talk to us about the technicals of Crompton Greaves Consumer Electricals? The stock, how is it likely to perform in the next few days and perhaps weeks?
I think, for Crompton consumer, stock, the one thing is very clear that the stock has spent a lot of time between the range of 370 and 320. But the way it recovered from the lows of 320 to almost 370 for the second time, we are of the view that now the stock is stabilizing above the levels of 360, which is positive. And even though there is some selling from the institutions and from others, we are expecting stock is managing to hold at lower levels. So from here, yes, the possibilities of hitting 350 are very high because the stock can fall to those levels because it moved from the lower levels. But otherwise, we are expecting stock to gradually move towards the levels of 400. So certainly it's a buy if there is any correction, maybe during the day or during the week.
Okay, all right. Let's also start addressing some of the viewer queries. Vijay Kumar Subramani wants your view on Amara Raja batteries. It has been fairly choppy last 1 month, but talk to us about the trend that you foresee going forward. Is this going to be the flavor, or will it see some stability coming by?
Yeah, for Amara Raja battery, the problem is that the stock is forming lower top, lower bottom series on daily and weekly basis. It is consistently under a lot of selling pressure. And on every month-on-month basis, the stock is falling from its previous peak. So it is better to stay away from taking any specific view on the stock because the stock is into falling trend unless and until the stock is not crossing the major level of 600, 620 where the stock has spent a lot of time. We are of the view that we should stay away from taking any specific long trade on the stock. But if there is any rebound towards, let's say, around 530, 540 levels, then there we should look for reducing some long positions and we should look for adding some other stocks. There are a number of stocks to buy for and a number of stocks have fallen to their crucial level. So we should look for switching from Amara Raja battery to any other stock.
Okay. In fact, I want to understand Gaurang's perspective as well, especially not only for Amara Raja, for the entire auto pack. Gaurang, one of our viewers also wanted to know if auto sector is losing its momentum. But if we have to look at the last 3-4 months, auto sector was actually the biggest outlier. Solid recovery seen, solid momentum seen across the board, especially OEMs and some of these heavyweight companies. So talk to us about auto sector outlook and how things are likely to be in the next few months.
So very honestly, Karanya, about 3-4 months back, we had given a contra buy call on the auto stocks when the entire world was extremely negative on the auto sector because of the supply side issue and of course more importantly the chip shortages that the entire auto sector was facing, and we thought that it was a great time to possibly nibble into some of the names. So we started advising rather investors to start accumulating M&M, Maruti, Tata Motors from the four-wheeler space, pure commercial vehicle play Ashok Leyland, earth moving equipments and tractor in form of escorts, and in the two-wheeler space, Bajaj Auto, TVS Motors and Hero MotoCorp. And if we had taken a contrarian buy call on the auto sector, then we had all the reasons to take some amount of positivities from the auto ancillary stroke OEM space. And honestly, Karanya, last 3 months, I have been looking at the launches that were made in the Indian markets by various automobile manufacturing companies, including in the month of July, that is this month itself. I was reading a report yesterday. There are 4 launches that are lined up. Now, where is the shortages and where is the lower demand? If you look at the waiting list, I think you have anywhere between 6 months to 1 year waiting list, depending upon what kind of vehicle and in what category you want to buy, including two-wheelers. And I think this positive effect of monsoon coming at about normal this year, it's again, you are going to see positive traction in terms of entry-level and mid-sized two-wheelers and four-wheelers. That is from semi-urban and rural India. And along with that, you have seen significant demand for tractors, agri-equipments, etc. So my sense is that if you have a little bit of elevated risk appetite, despite the recovery that we've seen in auto and auto ancillary or OEM segment companies, I think it's still, in terms of investment idea long term, they still look good in terms of valuation. So start accumulating and use dips to add on to it.
Okay. Shrikant, I can't help but ignore the number of questions we're getting on IT space, which I discussed in detail with Gaurang as well. Kamalaja wants to know your view on Tech Mahindra. Then you also have Harsh Shah, who's writing to us about Wipro. Saurabh Kumar wants your view on TCS. So definitely, given TCS earnings, a lot of these names will be in focus as well. Any of these names you want to flag off for us that could see some positive momentum, not just today, but in days to come?
I think, for IT companies, one thing is very clear that they have fallen heavily in the past and they are rebounding from their lower levels. Means based on that, we can say that after this particular announcement, quarterly numbers announcement from the TCS, we are going to see some lower opening for TCS, and then after the guidance, it will establish the overall trend for the IT sector. So most of them have fallen to their extreme level. That's the broader view. So in case if there is any correction, maybe in the next 10-15 days during the quarterly numbers, during the announcement of the quarterly numbers from the IT companies, we should be buyer in select companies like Tech Mahindra, TCS, as well as Infosys and HCL Technologies with a medium to long-term view, because they have fallen to their extreme levels, and most of the time companies and market discounts a lot of things well in advance. So maybe like those who are like large players and investors of the market, they were waiting for the announcement of the quarterly numbers, and after that they may start their buying with a medium to long term view. As it happened in the auto sector, similar thing we are expecting from the IT companies. So broadly we are of the view that if there is any correction, we should be buyers specifically into Infosys, TCS, Tech Mahindra and HCL Technologies.
Okay, so all the heavyweights, one can look at buying at this juncture. Unfortunately, Shrikant will have to end the conversation. We're running out of time, but pleasure having you on board as always. And Gaurang, thank you so much for joining us as well. Guys, that's all we have in this edition of Morning Trade. Thank you so much for tuning in, but do stay tuned. Markets with Santo and CJ is coming up next.